Good morning, traders. It's 8:01 a.m. Chicago time, 9:01 Eastern on the 10th of May, 2017. It's a Wednesday, hump day. Thanks for joining me on this Trader Bite, early nourishment for your trading mind. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The overall market stance today is mixed. There's no real commitment in either direction except for crude oil. Crude oil gapping up to 46.58, up 70 cents or 1.5%, followed by gold, which is trading at $1,223.80, up 0.63%, and the yen. So there's a skew towards assets moving to safety. A little bit this morning. The overnight high in the S&P minis is 2393.50. The overnight low is 2387.50, which is right on the nose on top of an existing naked point of control. So we'll look at those details in a bit. Overall, the market has made new all-time highs at 2400. I was looking for at least a push through. There was a lot that traded at the top there. For those of you who have S5 Bookmap to look at the heat map, you would have seen a whole lot going off 2400. Of course, that's a century strike price. It's a price where there would be a unusual or relatively unusual interaction as options and so on are hedged. Overnight, consumer prices in China rose by 1.2% in April, above 0.9 print that economists were looking for. Oil jumps on the API inventories shortfall. It's the API data showed U.S. oil inventories fell by 5.79 million barrels, 5.79 million barrel deficit there. That number came out after the close yesterday and has resulted in this nice little gap up. Although we are completely imbalanced here in crude, it hasn't gone anywhere really. Other than that, this morning, ECB's Draghi came out at 6 a.m. and was releasing comments regarding the Eurozone. He reiterated that his view is that the Eurozone is clearly improving with cyclical recovery, increasingly solid, need to maintain the current substantial degree of monetary accommodation. ECB measures have been very effective, have stabilized inflation expectations. Other than that, let's just take a look at what we're expecting for today. There's not much more to report. We got U.S. import prices this morning, but at 10:30 Eastern, turn on my news feed. At 10:30 Eastern today, we get the energy inventories from the Department of Energy, the DOE U.S. crude oil inventories expected at a deficit of draw of 2 million. Distillate inventories are looking for a draw of 800,000, and gasoline inventories looking for a surplus of 350,000. And then at 2 o'clock this afternoon, we get the monthly budget statement for April, expecting 179. As far as speakers, we're looking for noon Fed Speaker Rosengren. At 1:20 p.m. Eastern, we're looking for Fed Speaker Kashkari. And that's all she wrote as far as what's on the calendar today. So let's switch gears and look at what was expected yesterday. Here's your primary hypothesis for yesterday. The primary idea of yesterday was for a sideways open, a potential test to the triple top, basically 2398, and then a drop down. Oh, I'm sorry. This was Fridays. This was actually Fridays. We opened the same way. My point is to demonstrate that we opened basically the same way as we did Friday, except yesterday I didn't do a trader bite. Except yesterday I expected a push to 2401 Uh, I'm in the wrong spot. I was expected to push to 24.01, and then I was looking for a pushback down and through. So let's switch gears here and look at what actually happened. So here's what I was looking for yesterday. It would open, push to 24.0150. Was expecting a 6-tick flush through that 2400, and then a rotation down. And then my expectation is for a bounce at the value high right here. Bounce at the value high, a test of the point of control, which was at 94.50 or so, and then a potential for a test of value low, and then consolidation into the rest of the session. I put those notes, by the way, on Twitter yesterday as far as my expectations for hypo 1 and 2. Again, I didn't do uh, a trader bites hypo. This was hypo 2 actually. Hypo 1, that was hypo 2. So hypo 2 was initiative move higher to 24.0150, then return to 23.98, and then potential push to 23.95, and then all the way down into value low. I didn't mention that. I ran out of the 140 characters. Hypo 1 was looking for an open responsive to 23.98, and then a push higher, uh, uh, a push higher into 24.0375. I'm looking for a test of this measured move here. That was hypo 1. That was hypo 1. And then hypo 3 was an open test drive. Open test drive. So test lower and then drive, and then potential for a push to 24.0850. Was looking for a drive away and a squeeze away from balance. So what worked yesterday was the hypo 2 24.0150 didn't get attained. We stopped at 2400, and then we ended up rotating down. So overall, the market was responsive yesterday, could not find any initiative buyers away from value. And so overall, we just have fallen right back into balance. Now remember, this balance has been going on since the 25th of April. Shifting this forward, we start to fill in the profile to the top side, and then we finally extend the profile up. But ultimately, we end up pushing right back to the value high of the microcomposite, right in this area here, 2390 or so. We got to 2388.75. The price is actually 2389 and a half for a value high. If we are not able to get above the 2393 this morning, then we are likely to see the 2384 even, and then the MC point of control at 2383.50. That is the most likely play if we're not able to actually push back through 2393 and bounce up. And that's what I'm looking for as a potential hypothesis this morning. The overnight session, pretty quiet, a very sharp profile, very balanced. Didn't accomplish anything at all really throughout the Asian and European sessions. The European session opened right in here, and we have not done anything but go sideways. We've taken a small climb just after Draghi started talking, but really no action. The volume though is pretty decent at 156,000, so there's a fair amount of participation, despite the fact that we didn't have much movement. The overall overnight inventory is short so far in price and in delta. The aggressor last night has been on the sell side. I'm looking for that to balance out and then for us to continue lower. It's better for day trading that we continue lower. So this morning, the expectation is an open auction as we sit inside of the prior day, the prior 2, 3, 4, 5, 6, 7, 8, 9 days range. Um, and then I'm looking for a push up to 93. I'm looking for resistance at 93 and a potential drop. And then ultimately, I'm looking for the extended target. The most likely target is 2387.50. That's only about 3 points away. The target for the day is really 2383.50 back into the MC point of control to test the point of control from above, which is very, very common. We do this over several days usually. That's my primary hypothesis. My primary hypothesis is for more selling today. If, however, find that we get a drop, so we put in um, our opening swing up here, let's say, and then we drop through, and then we finally bounce through the opening swing, then look for a push through that 2393, and for the market to regain 2398. So I'm looking for it to push up to 2398 from about 2387.50. It's about the range that we'll get. The extended target again is 2401.50, 2401.50 up here. That would be hypo 2. That would be the rally hypo. So how do we trade this hypo? It's not just theory. How do we trade this hypo? We're looking for which side makes the first push, a directional push. Generally, that is done in a kind of a grindy, slow way. But what I'm looking for really is which side has the bigger rotation or the unusually large rotation of about 4.75 points or higher. And then we start to get clues as to who is likely to dominate. And I'm expecting that we're likely to push lower, and then the dominant move will likely be to the upside. And then our job then is to find areas to lean against. What do I mean by areas to lean against? Look for day type levels that provide support if you're going long, resistance if you're going short. Look for day type levels where you find a lot of liquidity that you can lean against, initiate a trade, and then have protection as the market moves in your direction. As it starts to rotate, my method of managing a trade, as it starts to rotate, I'm looking for a 2-point scale out to mitigate risk to get my theoretical average improving, and then that helps me relax in the trade and then hold on for the runner. And in that case, I would work 2398 ahead of 2398, ahead of 2400. I generally front run my levels by 2 ticks and then look for the runner all the way up to 2401.50 or so. So that's just a brief explanation for those who are new as to how I'm approaching the entry. So I have a plan. I'm looking for which plan does the market pick. I cannot set the plan for the market. Obviously, I'm too small a trader to do anything about it. So I'm looking for the market to tell me what plan, what is the appetite of the participants, of the group of participants. It's like, think of us as a herd of wildebeest. Our job is to stand away from the herd a little bit and find out which direction the herd is starting to push in, and then to start moving in that direction, as opposed to trying to pick tops and bottoms and fight the market, which in my opinion is just the way to lose. So those are the key hypos that I'm looking for today. That's all I have for you. Good luck today, and I'll catch you tomorrow morning. Take care.